Hello everyone, welcome. Hashtag AskWebCo. Super excited to have you here today, especially because it's the first one going live updates. Thank you for the 100 plus people that registered. And I know there are many more that unfortunately couldn't make it. We're going to make this a weekly thing. And really, just to give a bit of context to the people here in the audience, this is all about you. This is all about live intel and updates for banking, for lending, for risk, for sales, for all of you in the industry. I am spending 4, 5, 6, 7 hours every single day and have been for the last 6 weeks updating global banks, national lenders, challengers on what's going on in the market, and really not getting the message out, the intelligence out, the data out, what's happening on the ground to enough people. And the platform here really is your platform to ask questions. I'm going to give you the answers if I know them. I'm going to tell you what's happening on the ground, and hopefully I'm going to add a lot of value, a lot of content, and you can go away, share it with your colleagues, and you have a better understanding of what's happening on the ground. A lot of you are coming in from overseas. Then we've got India, Europe, even Asia in the middle of the night. Thank you all for joining. And a lot of UK people, Manchester, Leeds, a lot of London surrounding areas. Thank you all for joining. And I think away we go. So context on the ones of you that don't know me, I'm in my 27th year in the industry now, absolute specialist in property and valuation, 27 years, 100,000 hours plus. And it's that insight and experience and knowledge I want to share with you. Been there before, pretty much seen everything pre-COVID and whatever COVID brings. Early 90s, Lehman's 2008, Brexit, COVID where we are now. So a wealth of experience and knowledge of really how to work in a crisis, what the property industry does in a crisis, what lenders do in crisis, what maybe borrowers do, risk, sales, etc., etc. And I think that's really the area I want to touch on today. Please send in the questions. I've got the live feed here, so everything that you have already sent through, I get here. I want to go through as many questions as possible because really it's your questions. If I can answer them, I'm adding even greater value for you participating here today. So I think it's really pertinent that today is the first market update. Why? Because your market, property market, was opened up yesterday, and because the market was opened up yesterday, it means today is the first day of the UK market going live. And what does that actually mean? I know lots of you are asking questions around valuation and around mortgage offers, and how easy it's going to be for that to progress and go through. So I think we've just got to start there. The RICS are going to send an update today or tomorrow, and the update is going to be something along the lines of surveyors and valuers can go into new build properties or vacant premises where they can do it safely and where they are fully PPE'd and protected, so that any germs or any risk of anything spreading with an individual is managed. So the guidance that's going to get reported today and tomorrow is really, really important for the lenders here. And I know we've got a lot of lenders here, a lot of challengers, a lot of private banks, a lot of the national retails are here. So that message at the moment is, yes, we're open for business. We can inspect new build vacant premises, but caveat, the RICS are making the official announcement later today and tomorrow. The second I receive that, I'm going to share that with all of you. So just want to repeat that one. new build properties and vacant premises that can be safely inspected can now be done. At the same time, it's a bit grey because we need the RICS to give confirmation exactly of what that means and beyond. How long was something vacant for, or what is suitably safely a vacant premises at this moment in time. So I think that's really, really important to understand. We're going to get an update today, an update tomorrow, and then you can make your decisions as a bank, as a lender, of how you're going to do that. So if something is necessary or suitable to be valued, and it's new build and it's a vacant premises and there's urgency around it, more or less that's what the RICS guidance is going to be. The property market in general. So I want to run through some timelines with you. If you tap onto the handout, so if you press the button on the right hand side, tap on the handout, it's got the timelines of how I perceive that the industries that we're all in are going to move. Now, I've been sharing this timeline with some of you that I work really closely with over the last, call it 6 weeks. And so I'm pretty pleased that more or less we've got it spot on in terms of the government proposals and timelines. And if we just look at phase 1, I know we're already in phase 2, but phase 1 had very small to medium-sized businesses functioning and trading. That would be estate agencies, that would be conveyancers, that would be valuers that were working in the industry. And from a lending side, and I think this is really important for a lot of you on the call, is that certain private banks carried on trading and did some really good business and built a nice pipeline. Certain challenger banks carried on trading, built a nice pipeline, and certain retail banks did the same. But then there were retail private bank challengers that said, actually, we're going to work on certain products. Actually, we're going to have a wait and see process to see how the pandemic plays out, or wait and see what the government does. So everyone behaved differently. And for ease of the webinar, I'm just going to say challenger banks, private banks, and retail, because most of you fit into those spaces. And what I think is important in understanding the phasing and contingency planning around that is understanding what you're doing, but also understanding what your competition are doing. Phase 1 for me was pipeline. It was, we're open for business, we're going to manage our pipeline, but that's going to have to happen around what the government does and what their guidelines are. So it's watch this space and keep things moving. Now we're in phase 2. Phase 2 is May the 11th, which was on Monday, to the 1st of June. What's very clear in phase 2, small to medium-sized businesses back in the marketplace, and it will take 2 or 3 weeks for them to get back into doing their jobs, the same as valuers, estate agencies, conveyancers, and lenders. So phase 2 is quite important in our cycle, because what happens at phase 3 is all the corporates come back into the game. The government will probably make further announcements around what we can do as valuers, what sales and letting agents can do, what banks can or can't do, etc., with their lending policy, conveyancing, land registry, and deal flow, etc. So I think phase 3 is going to be where the volume comes in. Phase 2 is a bit fighting for space and now working through your pipeline, because suddenly you can get your new build deals through, you can get your vacant premises deals through. If conveyancing was on standby, if valuation was on standby for whatever reason, suddenly things are going to start moving. So to the lenders and the risk people who are on the call, I think this is a really important place. I think we can now start seeing some of the deals happen that weren't happening, and you can start pushing for business that you weren't pushing for before, maybe because you couldn't see what the timeline was going to be and maybe not see light at the end of the tunnel. So I think phase 2 is really, really important for you in lending and sales to start understanding that pipeline needs to be moved. we were probably looking at about a £1 billion pipeline over the last month with the lenders that we work for. And we probably represent in retail, probably the five largest lenders in the country. Why is that important? Because you understand what's happening at a real macro level, and then you work with challengers and really good private banks that I would call micro level, especially the ones that are working in prime, super prime, because their marketplace works a bit differently, it's a bit more bespoke, their lending processes can be a bit more flexible in terms of LTV coverage, etc., and pricing policy. So there's a lot of nuances around the different type of lender that you are and how you bring in the phasing. Phase 3, phase 4 is really where the volume comes back in, because the second the corporates and the panel managers and the major CBREs, Savills of this world come back into the game in terms of agency, in terms of valuation, and the panel managers of this world, because they're distributors and suppliers. Once they're back in the game, then everyone's in the game, and suddenly it's how do we manage with the supply? We've got all of these properties looking to go through. We've got all of these refinances looking to go through. We've got all of these renewals. We've got all of these valuations that need doing for this. And suddenly it becomes a bit of a distribution supply chain backlog that needs to be managed. And that's going to hit all of us in June. And so really your contingencies now is it's May the 13th. What are we doing as a business? What are we doing within ourselves to make sure we're working really closely with our suppliers and distributors, that's valuers, that's conveyancers and legals? How are we managing our pipeline, knowing that we can work within certain restrictions, within certain government guidelines, follow us in the RICS, etc., but to move those forward, so that when June and July kick in and thousands of properties need valuing, or thousands of properties need conveyancing, and thousands of deals are going through, suddenly you're not at the back of the queue because you didn't plan and do your contingency around that. I think that's really, really important. It's one of the biggest messages that not only I'm going to give you today, but every week that we're going to speak for the next 4-6 weeks moving on, I'm going to be sharing with you what's happening on the ground so you understand. I'm very lucky to have a live feed with all of the lenders, as I told you, and all I'm going to be doing with you is sharing what I see on the ground, the deals that are going through. So some very big deals have gone through in the last 7 to 14 days. I know a lot of you are on the call because you want to know what's going on with pricing and deal flow, what's happening in prime, super prime, are there renegotiations? And I think probably that's going to be the next piece in the call now, is what is really happening on the market. We are going to talk mostly about resi, because resi is where the transactions can happen the easiest, especially if it's vanilla. Commercial market, more challenging, because to gain access to the properties, especially where they're tenanted, and if it's high street, and if it's retail, it's all more complex. And I think the commercial industry, especially where you've got HMOs and buy-to-lets and multi-tenanted properties, whether it's high street or not, that's going to be really challenging. And I think phase 3 on the timelines on your sheet is where that's going to be coming into play, unless you're comfortable to do your work, maybe with external drive-bys or even desktops. And I think that's something we can discuss further in the call. So let's move back to the deal flow and what's happening on the ground. Please keep sending the messages, great few messages there. I'm definitely going to get to the messages, and anything that I don't discuss, put on the message board so I can discuss it, because really it's Q&A, and that's where we're going to spend the last 5-10 minutes of this, so please send your messages. Okay, so deal flow. What we saw pre-lockdown was we had all of the deals waiting to go into exchange, and some going to completion, and then some couldn't happen. Okay, so conveyancing couldn't happen, or the move couldn't happen. X percentage of those deals went through. Why did they go through? Because certain conveyances were working, certain lenders were working, certain valuers were working, certain estate agents were working, and removal firms were working. So deals went through. So for those of you that are really not on the ground and you think that nothing has happened over the last 4 to 6 weeks, that's not true. Let's say a percentage of deal flow went through. I can't really tell you exact numbers, but we could probably say 20% of deal flow was able to get through. Maybe another 20 to 30% was either put on hold or some renegotiations took place. Maybe another 20 to 30% the deals didn't happen and they fell out of bed, and there are some that maybe have a bit of everything. So you kind of like saw 3 or 4 different areas of what happened to the deals. Now what's going to be really interesting is now that we're going live and the property market is reopened and those buyers can go back into the properties that they thought they were buying or hoping to buy, we're now going to have to watch every day transactional evidence. What deals are going through, what deals renegotiated, and what deals fell out of bed, and then what happens when they come back to the market. This leads me on to the next point, is pricing and market evidence. As you all know, as valuers, we can only work on the market evidence that there is in the market. That means we need sales. We can only work on the sales that went through during the lockdown, which there were, and we have that live information. I'm happy to share that. And at the same time, the sales that went through pre-lockdown. Now, there's a certain amount of uncertainty in terms of evidence moving forward, because as in 2008 with Lehman's, as with Brexit, we have an uncertainty clause going into the valuation report, because we need the new deals and every deal that happens from today onwards to go through to confirm where pricing is. Now, those of you that worked with me during those periods will know it takes a few months for the sales comparable evidence to get back into the market, to then feed into the reporting, to give you as risk and lenders enough comfort that that's the new pricing for that piece of the market. At the moment, we can only work with the deals that went through pre-lockdown or the deals that went through during lockdown, and I think that's really, really key and really, really important for you to understand. So I know some people have asked questions around that, and hopefully that answers that question for you. Another question I can see that's coming through is in relation to desktops and drive-bys. So we know now that drive-bys can happen, okay? So that's really important. So for the ones of you that only wanted to do desktops or were only waiting for drive-bys because you've already lent on the property and it's a renewal or refinance, your drive-bys can happen now, and that's okay. And I think that will give you a degree of comfort. The property is there, and maybe there aren't development work that's happening, or if there is, you'll get informed. With the desktops, some of you were doing desktops for refinance or stuff that you already had on your book that you were comfortable with. Some of you were doing desktops and then deferred inspections at the first convenient point of inspection, especially for the prime, super prime market, where obviously we're talking high risk, a lot of lending going into the millions of millions. And I think now, moving forward, for those properties that are new build, or the properties that are vacant premises, and according to the RICS guidelines that we're going to get announced, can be seen internally, suddenly you can start prioritizing those deals and get them over the line. And without question, anything that isn't able to be seen now because the RICS say these can't be seen safely, I'm pretty sure that following the timelines, 1st of June, 3 weeks, 2.5 weeks from now, suddenly the guidelines will allow for more inspections, more properties to be seen, and so those deals can happen. Now, anyone that understands how deal flow works and the speed of deals, if it's in your pipeline, to wait 3, 4, 5, 6 weeks is really not a problem. The urgent ones that are super necessary can be dealt with, and I think that's important to understand, because someone isn't allowed to be homeless, or if their business was going to fail because something didn't happen, that wouldn't be allowed. So common sense and where suitably necessary, That's the wording, the terminology, where it's suitably necessary. I think you can understand that those deals can be managed. Everything else now, you're playing a short game. You're playing a 2 to 3 week play, literally, to then be able to get into the properties and see them. So from an inspection, from a deal flow for the 1 billion plus pipeline that you guys or girls are working on, that's going to happen. So I think you've just got to be a little bit patient and play that out, but understand that the market's alive and kicking and moving forward. Question just come in, just want to go through the next question. How long do you expect we can reliably depend on the valuation reports given the marketplace? So I think that everything you'll be provided by an expert and a specialist within the marketplace that you're operating should be suitably reliable and should have really good intel in that. If you're only referring to specifically comparable evidence, you're going to have to rely on the evidence that was there pre-lockdown and on what happened during the lockdown, and then it's going to take a few months to play out. It takes 2-3 months to have sufficient evidence to then support the new valuations that are coming through. From a risk perspective, I do like the 90-day full sale figures in your reports, because then the valuer has a bit of flexibility to guide you because of the uncertain market conditions, and then suddenly you understand the difference between market value based upon the evidence and then full sale value based upon restricted sales timelines. And that's kind of like your worst case scenario. What would I do if that was the case? So I think everyone needs to understand there's going to be a few month play for certainty to come back in with comparable evidence, which in turn means the absolute reliability on the valuation reports. At the same time, a professional with a high degree of specialist knowledge and experience should be still providing very good reporting for you to be able to make good lending decisions, because the market is moving. So I think that's really, really important to understand. Uncertainty at this moment in time is absolutely the new certainty, and it will be. And I think we've really got to get comfortable with that. Your risk models and your lending models need to get comfortable with that, because what we're seeing here with COVID-19 and lockdown is businesses still need to operate. We still need to be advising you. You still need to be doing business, especially the retailers on the call. You have to lend. The market demands that you have to be giving money to the market. Thus, you're relying on distributors and suppliers to help you make good, sensible lending decisions. But moving forward, for all of you, the ones that are lending strongly now, it means you've got agile, flexible businesses that allow you to do that. The ones that are more rigid, it's okay, what policies, if we don't want to be so rigid, can we bring in the future to manage downturns or crises or economic declines better than we're currently doing, knowing that we're another 6 months, a year, 5 years away from a COVID or a layman's or whatever it might be, a global war, virus, market uncertainty in another area. These things happen now more commonly than not. Brexit was a very good example of that. So I think we just need to be completely open to that and understand uncertainty is a new certainty, and we should actually build that within our modeling and be more flexible with our approach to business. Next question. Do I have a view on what the market will do when things return to normal? Okay, prime central London. I think all of us that work in prime, super prime can go back to 0809 and see that 0809 saw prime and super prime perform extremely well. Okay, so it was the best rebound market. Private banks did very well because the retail market wasn't in the lending game, and there's an opportunity that might happen again now. Prime, super prime, pre-COVID, pre-lockdown was underpriced. All of you that speak to me regularly know that post-election, January, February, the market was performing tremendously well. So it was underpriced and performing tremendously well. So I believe our hope in that space, and that is a micro space, the whole country or the world is a macro space, but micro prime, super prime London has a chance of performing better than the macro if there are going to be some declines, because the starting point, it already gone back 20-25% over the past few years, so it was underpriced. I think that's going to be a really important talking point in the weeks that come, and following the deals that go through on a daily basis and sharing the intel with you is going to be really important. I can share with you that a few 20 million plus deals got agreed within the last 7 days. I can share with you, with the live intel that we're getting on a daily basis, that the 3 to 6 million market has seen exchanges or deals agreed over the last three weeks. Some of them have seen small declines and renegotiations. What I'm seeing of around 5 and maybe even 10%, not much more than that. But let's just be clear, in prime, super prime, because I know that's where some of the questions are coming from, is that if you don't need to sell, then the pricing won't fall dramatically. It's only where there's a huge volume of distressed sellers where you see price falls. So if someone doesn't need to sell, they're not going to sell at a distressed price. They're going to sit and wait, or maybe have a small renegotiation, but we're going to see that intel come through. I want to get through more of the questions. So from my point of view, much comparison, pent-up demand, Brexit. Okay, so I've just kind of like discussed that. The demand post-election stroke Brexit was huge, and we're going to have to watch this space. We're going to have to see how many of the deals and the £1 billion pipeline of deal flow goes through, and if there is price drops, price falls, and renegotiation. We're going to have to speak every week. It's my job to get all the information, all of the data, all of the intel, use all of the experience to share with you the trends that I'm seeing on the ground, and then share that with you so that you can make really good lending decisions moving forward. And I think that's one of the things that this platform will do. I know we're coming up to time. I'm going to answer the last couple of questions, and then we're going to call it a day. I definitely need your questions. Everything that I haven't answered today, send via email or save for next week. The whole point of this platform is I'm on the ground. I'm seeing the properties. I'm speaking to the agencies. I'm speaking to the conveyancers. I'm dealing with the global banks, both UK challengers and private banks across the world. So I want to share with you great intel so you can do really good lending, manage your risk, and move forward as the marketplace and the world moves forward through COVID-19. I really want this platform to be the go-to place for you. For that to really work out, you need to be asking the questions, and I need to be giving you really good added value, really good content, and using all of my knowledge and experience as an independent, because my viewpoint is completely independent, only doing it for you, and that's really the way forward. So keep the messages coming in. I'm super grateful for the 100 plus that registered today. I really hope that some of the content you can go away and think about and work on, and please do share with your colleagues and your teams. This is a risk lending banking platform that should allow you to do business following the timelines, following the government guidelines, and ensure that you get back to normal. And I know one of the questions is normal. We don't know what normal will look like. I can assure you, if anyone's going to see what normal is going to look like first, it's going to be me. I'm going to share it with you, and I can assure you of that. So for this week, thank you for your questions. Email me any other questions that haven't been answered. I will answer every single question. Ensure you come back next week and invite your colleagues, and make sure that the value in the content is what you want. All I'm here to do is share what's happening on the ground, give you the intel, give you the knowledge. So thank you for joining, super grateful. Thank you for all the positive feedback. Stay safe, and we will speak 1 week from now and see what the first week of the market update did for us. Thank you so much.